And a very good morning to you, good afternoon, good evening, good day, of course, depending on where in the world you are watching this from and when in the world or what time in the world that you are watching this particular episode from. Thank you so much for tuning in. This is the Vuyo Show coming to you live from New York City. It is your daily dose of global goodness. That's what we are serving you this morning and this day. And I'm hoping that you're ready to receive all of that and so much more. So please do sit back, relax, and let's enjoy the next couple of minutes together, you and I, and of course, joined by a very special guest all the way from Florida in here in the United States. And I know for a fact that you're going to learn so much. You're going to be empowered, and you're going to be ignited in this conversation we're going to be having today. So please be ready for just to be enticed with all of that, and of course a lot more on the show today. Formalities, I was just going to get them out the way so that we can get ready with our conversation with our guest today. Do not forget to follow us on social media. We are at the Vuyo Show across all social media platforms. So make sure that you are there with us on Twitter, on Facebook, on Instagram, on TikTok. And don't forget to like, share, and subscribe our YouTube channel. And of course, listen to all of our episodes as well on our Spotify. It's all across social media at the Vuyo Show. And of course, do check out our website, www.thevuyoshow.com. Right, and so let's meet our guests, because I know you're probably wondering who exactly this is. I did say he's joining us all the way from Florida, and I got to meet this guest a couple of months. Well, I think about 2 years ago in Atlanta, Georgia. And we shared a couple of similarities, like being an author, which is what he does, but he's also a mortgage expert and is doing incredible works and wonders within the real estate space. So please, ladies and gents, wherever you are from the world, help me put your hands together for our guest today. His name is Lawrence Martin. Hello.
How's everybody doing?
How's everyone doing? How are you doing? I'm so happy to see you and to be having this
Yes,
conversation with you today.
I am doing quite well, actually.
Yeah,
So I'm just happy to be on with you and just getting this time in with you.
I know. You had such a cool evening yesterday. You had a fun
I
evening
look,
yesterday, right?
it was amazing last night. What they say about last night, you know,
Uh-huh.
it was nothing short of an epic movie. I couldn't have
Ah,
planned it more
man.
better. And
Yeah,
so we had a
yeah.
great networking event last night. It was amazing. So
I'm
yeah,
happy to hear that. I love it when events around this time of the year they go successfully, but also it's really a precursor for people for the upcoming year. So what better way to
right.
end off the year with a networking event that you know that when the brand new year begins, you have all the tools in place, right?
That's right.
So
Absolutely.
we're gonna be unpacking all of that today. Bites and brews mixer. We're gonna be talking
Hmm.
about your book, your ebook. We're gonna be talking
Yes.
about mortgage and real
Yes.
estate and the future and what that looks like. And of course, a little bit of traveling, because this is a global show. So we're
Okay.
going to touch a little bit on that as well. But we met
Awesome.
is it 2 years ago that we met in Georgia?
Y-
Or,
yes. 2 years ago. It was about 2 years ago.
yeah.
As I recall. Yeah. Absolutely. So
And
it's
time just travels fast.
it
Uh-huh.
does. It was a lot going on then, and just crazy
Yeah,
how times
yeah,
have
yeah.
changed. So
I
yeah.
know, I know. It is just after COVID, and we were just getting back to the hang of things. But
Yep.
what connected us during that time was I was here for my book tour, and you were an
Hmm.
author as well, right? And I
Right.
remember, and we connected via that. We're like, oh, I'm an author, and you're an author, and that's amazing.
Yes.
So
Exactly. Yep.
let's talk about that particular thing, and before we just unpack all of the other things that you get
Hmm.
to do. But writing a book,
Yes.
and it has a very interesting title.
Right.
Who gives a? How do you say it? I say FICO. What do you
Yeah.
say?
That's absolutely
Okay.
right. Absolutely correct. Who
Who
gives a
gives a
FICO?
fuck? The Secrets
Yeah.
to the FICO Score Legacy, Book One. What inspired you
Yes.
to write this book? What was going on that made you want to decide that this is something that I want to put out and do it in a
Yeah.
book capacity?
Well, I mean, it's kind of my story starts with my journey with credit, my personal credit score. And
Mm.
at the time, I was in the process of buying another home. And at the time, my scores were not where I wanted them to be. So I thought by just paying my bills on time and just basically going through typically what everybody thinks credit is about. Even if you have like collections, you think you need to pay them off. But I had no clue about the other side of how credit actually works. There are so many different moving parts to it. For example, there's moving parts to how the score works. There's moving parts to if you do have collections, that's more of a legal matter. It's not necessarily whether or not you owe the debt. Now it becomes more of a legal matter. There are consumer right laws that I didn't know about. So really what compelled me to put this together, first of all, is giving consumers the understanding of how their scores actually work. So when they do try to improve the score, they know about the moving parts in the FICO score that make up a great FICO score. There are 5 elements to the FICO score. And I just pretty much explain about the FICO company, how it started, and also I explain in the book on there is a secret sauce to the scores, right? That's they don't tell anyone about. But at the end of the day, there are some fundamentals to building your score that most people don't know about. So when I found out about them, like I got to share this. So that's how I came to the conclusion of just saying I'm going to write this book and get the word out.
And I guess for you, it was more of putting the information out than it was about being an author or kind of
Mm-hmm.
having that title, but more of it saying, I want to serve individuals, I want to serve people. And the best way to
Right.
do that is to kind of package this for them and then share it
Right.
out with them. I like
Yeah.
that particular approach. You mentioned there were
Yes.
5 elements in the FICO.
Yes.
Firstly, what is FICO for someone who's wondering, what does it stand for? What does it mean? What is it? And
So
please share those 5 elements with us as well.
So the FICO name comes from what they call the Fair Isaac Corporation. That's what it is. It's a corporation, and their job is to number one collect the data and create a score off of an algorithm that they've created. It's proprietary to them. All right, they're not like the credit bureaus. They're specifically a scoring agency for developing FICO scores. Okay, that's their only goal, only mission. Now, the 5 elements that they do have is your credit history. Okay, like on time payments. Another term for it is on time payments. Your credit utilization. Okay, so how much credit you're using with the cards that you do have. Right, they're going to measure you based on your utilization as well. Okay, and then also a credit mix. Okay, that's number 3, and that counts for 15% of your score. So that would include like accounts such as mortgages, auto loans, student loans, credit cards, all mixed up together. And then you have inquiries, which count for 10% of the score. That is, if you're in the process of acquiring credit, just an attempt to get credit, you can get points deducted from your credit score just for inquiring about a certain loan. And then you have the last one, which is your overall credit mix. Okay. And that is basically the 5 elements that are going to make up the overall score. All right.
Okay. And I'm hoping, and I love telling our audiences whenever we're having a conversation with a guest, to get out a notebook and a pen and jot these notes
Mm-hmm.
down, because I feel like you're sharing
Right.
such valuable information today that could help
Yeah.
individuals, within this avenue.
Right.
And within your space line of work, you help. I think what you do is so important, which is why I really wanted to
Mm.
have you on this podcast, because you help people's
Right.
dreams come true to a certain
Right.
degree, right? By helping them get
Exactly.
homes. Um,
Exactly.
what are the fundamentals that you would say a lot of people don't look into when
Mm-hmm.
interested in buying a home or looking to buy and
Mm-hmm.
purchase a home, that
Yeah.
you've seen as key mistakes that they make?
Right. So the first one is going to be credit. That's number one. Making sure that they check their credit from the right sources. Most people are going to check Credit Karma. Now, Credit Karma is going to use a scoring model called Vantage 3.0. Okay. They're not going to be scoring like FICO, like the FICO algorithm. Now, it's important for consumers to understand that when you go and use the Vantage 3.0, it's not going to give you the accurate score. It's going to give you what they call an educational score, just for giving you an idea of what your score would be. Now, what we use in the mortgage world, we use another version of the FICO score, which is a mortgage industry option score. And we've been using this score for years. It's really called a classic FICO scoring model. And it has not changed since its inceptions in the 90s. So it's important that they pull that score. The only place that they need to go, first of all, to pull that score is myfico.com. That's the only place that's going to give you all three scores from the mortgage industry option score. So if you're a consumer and you want to buy a home, the first thing you need to do, go to myfico.com, go and pull your mortgage industry option score. Now, if you look on the myfico.com site, they're going to have a platform of many different scoring models for the FICO score. They have a scoring model for all the industries. The banking industry has a score. The auto industry has a score. Credit card industries have a score. And then they have an overall credit rating score, which is FICO Model 8. They've been using for years. But, whatever industry you're in or whatever loan you're trying to acquire from a certain industry, there's a score for it. And being aware of what that score is will help you out with making those decisions. All right, so that's number one. Number two is making sure that they have the down payment and the savings. Okay, so even though there are a lot of down payment assistance programs, you still need to make sure that you have enough of savings. I would say a good rule of thumb is 7% of the purchase price. So if you're buying for every $100,000 that you want to buy on a home, you need to save about $7,000, and that'll take care of your down payment and your closing costs. Okay, and that's how you prepare to buy a home. All right.
Okay, so and now one is wondering, with the economy that we are in currently right now, is it a good time to buy a home? I know that that conversation and that debate has been kind of
Yes.
going for a bit. Do you buy? Do
Mhm.
you rent? Do you wait for the market
Right.
to? So, what is your advice within that regard?
Right. So one of the things that I tell people, when you're ready to buy, it's a good time to buy. Okay, because rent is never a good strategy. There's no scenario that I can think of that renting is a good strategy financially. Because even if you rented and you say I'm going to rent, even if you wanted to buy an investment property just to cover the rent, that would make more sense. But not to buy a home and just rent, it doesn't make any sense financially. So when you're renting, and I know a lot of people are concerned about the interest rates, but when you're renting, you're paying 100% interest because you're not getting any money towards the principal on the home that you're staying in. Okay, and there's all strategy behind why we say you need to buy, because if you buy a home 5 years from now, the home increases in equity. You can use that money to put down on a business, and that's really the strategy behind what we call the American dream. The American dream is not just buying a home. The American dream is buying that home and then also using the equity to buy businesses, and that's really how we had a strong economy coming out of the 70s and the 80s, simply because the earlier generations, they would borrow against their homes and then they would start businesses based on that. So a lot of these businesses that you see, like Walmart and a lot of these companies that are old now, they started with guys that pulled money out of the equity of their home. So that's the American dream. And that's how America was built and funded, simply because people had homes, they can draw equity out of that home and then also be able to buy a business or start a business.
Yeah, I heard the story of McDonald's of how fundamentally, and I think I watched the movie as well. I think his name was Roy. Can't really remember, but he
Uh-huh.
bought properties, and that's how McDonald's
Yeah.
eventually was able to kind of
Yes.
go around the world, right? So the importance and the
Yep.
power of having
Yep.
property as an investment, right?
Hmm.
Is
Yep.
property? I've heard also people talk about that property is one of the best investments that one can make.
Right.
How do you justify that? How do you support that statement that property? If
Yeah.
you are thinking of doing investment, think of the property as one of the best routes to do that.
Right. I think what when people say it's the best route is because it's the easiest to understand, right? It's not necessarily the best route. It's the easiest to understand when it comes to investing when you're a newbie investor. Because if you want to invest in, let's say, stocks or a company, then that becomes more complex, right? There's a lot more risk. There's many moving parts that you need to research. You need to research the CEO. You need to go and do the, analysis on, their moving averages. It gets a little complicated. When we tell people, hey, invest in a home, most people can understand investing in real estate or investing in property simply because it's not that many moving parts as it relates to investing. Okay, once you buy the investment, it's pretty simple as it relates to your return on investment, what you're expected to get back. Now, I would say it's not the best investment; is the easiest to understand. That's why I would recommend it, especially if you're not into doing research or making sure that you can invest in a company that is going to give you a greater rate of return. Because obviously, real estate is not going to give you the best rate of return, but there are other caveats to it. For example, with real estate, you'll have the opportunity to write off a lot of your taxes on the property. Depreciation, right? That's a factor in buying real estate, which you may not be able to get in other avenues of investing. Real estate does offer that because it offsets your taxes, even with the losses, even with the expenses, depreciation. All of that really ties into it being a great investment. And being aware of that and understanding that makes you a more savvy investor because when you start increasing your cash flow, you need to know where to park your money. You need to know how to basically not necessarily um, evade taxes, but avoid taxes. You know what I mean? That's the most important thing because taxes can really ruin you as a business owner. So you want to make sure you have an avenue where you can write off taxes, legally, of course. So,
Yeah, yeah.
mhm.
So it's a safe, it's a less risk within property and
Mhm.
guaranteed, I guess, ROI
All
compared
right.
to other
Mhm.
business investment models. Is
Right.
there a best place to invest in, specifically in the USA? I mean, you probably understand all the different states, right? And if you were
Right.
to kind of consider which state is the best state to invest in currently, or rather buy
Oh, that's
property
a good.
in right now.
Oh, that's tough. That's tough. I would probably invest in Texas first, right?
Okay.
Now, Texas has great emerging markets such as Dallas, Houston, Fort Worth area. Great markets there, emerging markets. Uh, I would mainly, when it comes to regions, I would mainly stay in the South because the future is in the South. I believe that because of the climate, where people want to live, as Americans get a little older, they don't want to live in certain areas anymore, so they gravitate towards the South, whether it be Georgia or Florida. So Florida, another emerging market. Georgia as a whole is going to be an emerging market because Atlanta is the epicenter of business in the South. So, you
Yeah.
have major airports, international airports here. So you just really want to make sure that you get into a place that has emerging markets because it doesn't matter if the land is cheap, if the economy is slow. All of those things don't matter when you're talking about buying real estate. What matters most is there innovation? Is there growth? Are corporations moving in? Will there be growth in the population and in the economy and how dollars move? That's the most important thing. So, the best place is emerging markets, and you could just Google that, look up, hey,
Yeah.
emerging markets in real estate, and that'll give you an idea.
Mm. So the
So
South is where it's at.
yes,
And
absolutely.
globally, is there? Do you? I mean, there's interest. I believe there's been a lot of interest within investing and kind of buying property and having property in
Yeah.
Africa. And
Yes.
I've had a friend talk about buying property in Spain. And do you
Uh huh.
are you currently in the know about investing in property globally on other parts of the world? Is that something that you can kind of
I've
speak on?
I've heard a few things. I'm not an expert in this area, but I've heard a few things. I think when Americans start thinking about investing abroad, there has to be other reasons why you invest, other than just I want to invest for the money. There has to be a long term vision for investing, right? Not just I want to park my money over in let's say Africa, Dubai, or wherever, and I want to get a quick return on investment. No, you have to basically know what's going on in the country. Excuse me, because you think about like things change in this world so rapidly. Wars break out, and things are going to happen. That's just how it works. It doesn't matter where you live or where. I mean, obviously, things are going to happen. Okay, but how stable is the government in that country? How stable is the systems? And I
Yeah.
believe I believe when it comes to frontier, I do see that Africa, places in the Middle East, Dubai, places like that with the warmer climates, they're always going to be something that's going to be sought out there. It's always been that way. It's just more so now. People are more looking at, okay, we have the resources here. Now it's time to develop those resources in those places, in those areas.
I love that. I
Mm-hmm.
love that. So it's important to be fully aware of the space that you're going and just
Right.
the geographical know-hows of what each country, what even city-wise, what you'll
Right. Exactly.
anticipate within that city. And
Mm-hmm.
for a young person who is currently just graduated, just finished, studying or just entered in the job market and kind of
Mm-hmm.
is really contemplating and considering buying property, living in property, what advice do you have for those just starting and don't have a credit score, don't have a credit record?
Okay.
How do you help those individuals maneuver and
Right.
understand the market?
Yeah. Great question. Now, credit is really based on history. So if you don't have any history, you don't have any credit.
Mm,
They often say no credit is worse than bad credit. It's true because you don't
wow.
have in history, you don't have an experience with credit, no relationship at all. So the first thing I would recommend is going and getting at least four unsecured credit cards. I mean, excuse me, four secure credit cards. That way you can build on that. Obviously, you do have to put a little bit of a payment in to get those cards. But once you get those cards, make sure you use them responsibly, pay on time. So you got four cards, you use them for 6 months, use them every month for little small items like food, gas, things of that nature. Then once you build your scores up, then you're going to apply for an unsecured credit card. And I would recommend applying for at least four of those, Discover, Capital One, Citi Card, Bank of America. Go to the banks, apply for those cards after you've established at least 6 months of credit. So that now you have 8 credit lines on your credit. And, also maybe you have I wouldn't recommend buying a car, but I would recommend having some type of what we call an installment loan, maybe a personal loan for about $5,000, and you pay that off completely, and then just show the track record that you are responsible for credit. That's the number one. And number two, you want to make sure that you have a budget in place. The budget is going to be the foundation for your savings. So the importance of the budget is to make sure that you can save, at a rapid rate. Obviously, That's probably going to be the first thing. That's the easiest thing to do. Then the next thing is just making sure, hey, if you can pick up extra hours here and there, if you can work some overtime, go ahead and do that, and then plan on just putting that money back, right? Because you're building up your credit, you're building up your savings, and you're making sure that your income is as stable as possible. So you want to have a 2 year work history as well, and making sure that you're not flipping from job to job or industry to industry.
Yeah, and have that 7% down payment that you had mentioned earlier on.
Yeah, you remember.
I heard that
Yes.
I've been hearing a term, right? And
Mhm.
called flipping houses.
Okay.
And it's become so popular on social media where people are kind of speaking of it
Right.
as a business, and as something that, what is, for someone who's probably wondering, who might not be in America and hasn't come to terms with understanding what that term particularly means, flipping houses
Okay.
as a business and as an investment model.
Mhm.
How do you explain that? Is it a good type of investment within like the real estate
Yes.
form? Share with
Yeah.
us, please.
Yes. It can be. It can be good. It can be disastrous. Now, you really have to know what you're doing. You have to get someone that is experienced. There are so many moving parts to flipping houses, so
Yeah,
much responsibility, and if you're not willing to wait anywhere from 6 to 12 months to get your investment out, even I would go in and say 18 months. All right. Uh,
yeah,
the idea and the goal of flipping a home is to be in and out of that home, be in and out of that contract for 6 months. So what you're doing is you're essentially forcing appreciation on the home. You're forcing that home to go up in value by renovating that home, right? So you're going to buy it low. Okay, you're not. It's not going to be a done house. It may have had some fire damage, wood damage, storm damage. You're going to buy that home as is. You're going to look at it. Hire a general contractor that's reputable that can get the job done for you, and then you calculate the expenses of what it would cost you to renovate the home, and then how much profit can you take away out of that home. Okay,
yeah.
so that's the whole goal. And then the other thing is you got to think about what it's going to cost you to finance that home and pull money from the lender to get the home finished. And then also figuring out if that home is in a market where you can put it on the market and sell it within the next 30 days of it being on the market. So that's the key to flipping. You got to make sure that once the renovations are done, once everything is up to par, the value of the home is going to increase and you can sell it for a profit, at a, reasonable profit, within the comps of the area. Okay.
Okay, okay. And within that 30 days, again, I guess it depends on where the property is. Is there an emerging market? Are people wanting to buy within that area as well? So I guess it also goes back to the research thing you spoke about earlier, that you need
Yes.
to do your
Yeah.
adequate research about particular
The
areas
area.
as well. Yeah. So
Yeah.
is this all an encapsulation of what happens at Bites and Brews Mixer? Is it all about investments? Is it all about property, or how do you go about explaining what that particular event
Yeah.
that you host is all about?
Yeah. So Bison Brew, we did start it as a networking event for anyone in the real estate industry. But then after maybe a few mixers we did, I just decided because other entrepreneurs were coming in anyway, right? So
Yeah,
we just said, you know what, let's just go ahead and open it up to entrepreneurs abroad, anyone that has a business, self-employed, or a business that they want to promote and meet people. Let's go ahead and just create an environment where not only do we want to just network, but we also want to have some fun, have a good time, and unwind as well. So it's not just about the networking, but it does kind of ease the atmosphere when you got
yeah.
nice music, you have the food and drinks. It does ease that, and everyone just lets their hair down. Obviously I don't have any hair, but uh, everyone just kind of like relaxes and get
Yeah.
into a mood and a vibe where they're just open to exchanging business cards and numbers and having a conversation and following up.
Mm. And I guess
So
also it's like when it's so rigid and it's kind of like the idea behind it is that we're gonna hear the network.
Yeah.
without having that element of fun, people kind of get so within their heads. But if it's fun and engaging, that way it's best way to communicate and engage.
Right.
Martin, I mean Lawrence, I keep wanting to say Martin Lawrence.
I get that
You
all the
get
time, you know.
that?
Yeah.
We're going to get into our next segment of the show called Global, or rather Going Global. And I'm going to definitely ask you a couple of global questions. So I hope you're ready for
Okay.
that. I hope you're ready for that.
I'll try my best now. I'm not gonna make any promises.
So, firstly, what does it mean being global? What does the term going global, being global, mean to you if you were to kind of
Okay.
conceptualize and think about it?
Okay. What global means to me to start is having a global influence first of all, right? It doesn't
Yeah.
necessarily mean that you're in all places at all times, but in a sense, if you are if you are influencing globally, right? You typically are. If you have a platform that's global, right? Or if you are a person that is known globally, then that is, essentially what I see, especially with the World Wide Web and you just being able to connect with everyone globally. It's just amazing. So I think in a sense we're all in a sense global,
Yeah.
from we can be, because you can look at a TikTok video from someone in Africa. You can look at a TikTok video from someone in Europe, and I think that's the whole point of having the internet, is to have a global community. When one video goes viral, everyone knows about it, right?
Around
If
the
you're in,
world.
it's
Yeah.
just like, oh, did you see that? That this guy in England or whatever, he did XYZ, or did you hear what happened? So news travels a lot faster now, and I believe to some degree we're all global, in a
Yeah.
sense. So
Yeah, we're part of a global ecosystem, whether we like it or not, or whether we acknowledge that or
really,
not,
like,
right?
yes, that's so important to understand. We're all
Yeah.
connected in some way.
And I personally believe that everyone, whether they are conscious about it or not, but has a list, whether it's written down or not, but there's a list of places that you would love to go to physically. Now that is
Okay.
right.
Oh
So for
yeah,
you,
absolutely.
what countries are top of your travel to go to list?
Okay. Okay. Ooh, that's a tough one for me. That's a tough one. Oh man, one country I would. You know what? How many do I have?
So maybe give me three. Give me three. Top of your
Three.
list.
Okay.
Yeah.
Top of my list, I would definitely say South Africa.
Yeah.
Uh, I would definitely say Dubai. Now I know Dubai is
Dubai.
not a country. Dubai is what do you call it? United
Arabs.
something.
Yeah, yeah, yeah.
Yeah,
Uh-huh, uh-huh.
yeah.
Okay, South Africa,
And
Dubai. Uh-huh.
ooh, I'm probably torn between Japan
Ooh.
and this is tough. This is a tough one, and possibly Italy.
Okay.
Japan,
Those
possibly
are
Italy.
those are like two completely different, but I guess
Yeah,
it would be a matter of deciding what cultural experience would be better, like you'd want between those two, right?
yeah, exactly, exactly. But because that's why I say it's really tough. I don't think I can go wrong either way.
Yeah, yeah.
Choosing that third one, but
Yeah.
yeah,
Okay, I
yeah,
like your
yeah,
options. I think it's kind of
yeah,
like
yeah, yeah.
it's like a multitude of different cultural experiences that you get in all those different
Right,
countries, and
right.
even geographically, like we have
Yeah,
Japan over there, and then because you've already been
hmm,
on the United States, so those are great options,
right.
and I'm hoping that when you go to those places, you're gonna come and report back on how those
Oh yeah,
experiences have been.
oh yeah, absolutely, absolutely.
And yeah, I mean, I'm so honored to have had this conversation with you,
Yes.
this morning. And I want to also kind of touch base on your ebook. You do have a free ebook out, 7 Keys to Raise Your Credit Score. How do we find your books? How do we find and connect with you? To continue to kind of, if one wants to go on that process, either for their
Oh
credit
yeah.
or for their mortgage, etc.
So the easiest way, and I have all of my information. You can go to linktree.com/L Martin. Linktree.com/L Martin. All of my links, my social media, everything is going to be on there. My IG is Lawrence at Lawrence the Mortgage Broker. Look me up there. I'm more active on Instagram, because to me it's like an easier platform, and
Yeah.
is less complicated for me to connect with people. So yeah.
That's right. I'm gonna leave the links on the description down below. So
Okay.
make sure to check Lawrence Martin out. What are your last words before you say goodbye? If there's anything that we didn't discuss that you'd like our audiences to know or be aware of or be conscious of before we say goodbye.
Well, I just want to say I thank you, Vuyo, because you're like I said, man. I just love the connection, love what you're doing, and I just pray that God continues to bless you to be a light to this world,
Thank you.
and continue to just spread that love. And I think for everyone, I just wanted to say, hey, listen, open up your heart, man, and continue to listen. The things are going to happen in life, but be encouraged. That's what
Yeah.
I want to leave. 2023, everything is here to develop for our good, not for our bad. So the
Yeah.
intentions are always for us to grow. All right.
Yeah, be encouraged over there,
That's
wherever
right.
you are watching and listening from around the world. Thank you so much, Lawrence, for joining me. Thank you at home for tuning in. This is the Vuyo Show, coming to you live from New York City. Of course, here to share
All
with
right.
you your daily dose of global goodness. We had a very good guest today. I did promise you some goodness, and I did deliver, of course, on this
Awesome.
conversation. Thank you for
Thank you.
tuning in. Now we're gonna say goodbye from myself. From Lawrence, it's goodbye and have a fantastic day. Cheers for now.
All right. Thank you. Have a great day.
Cheers.